So just a general advice disclaimer is this presentation is aimed to be educational in nature and should not be solely relied upon as a recommendation or an invitation to enter into a particular transaction or to apply a particular trading strategy. You should not engage in trading unless you understand the nature of the relevant markets, the rules and the application of these rules to the strategies you are trading and the products to the full extent, exposure to risk or financial loss. If you're in any doubt, you should seek professional advice. The advice contained in our site has been prepared without taking account of the objective financial situation or needs of any particular client. And because of that, the client should, before acting on the advice, consider the appropriateness of the advice. Having regard to the client objective financial situation and needs, and you should know that for strategic clients are required to read all product disclosure statements, and there's 3 in total. Okay, so welcome again, and why listen to me? I'm a member of many Forex societies, and I've been trading the markets over 12 years, and I've gathered a lot of experience. I've traded with many professional traders and firms and others for the past 9 years. I've learnt their lessons and been able to piece together some costly profitable strategies that I've created. I have a gift for teaching and tuitioning people. I love helping and teaching people and have great success in many ways throughout my life. Now, retracement reversals. Before spotting opportunity to enter a trade, you have to be able to determine the market's environment, and sniffing out retracements and reversals is the key. So as we can see here, the head and shoulders, this is one part. And, you know, we've all know what it's been like to be hit by a retracement or reversal. No one likes to be hit by a retracement, or I should say a smooth retracement, but sadly it does happen, and why? So I'm going to try to go through this presentation as quick as I can because I want to get into the MetaTrader. And in the MetaTrader, I will show you how the retracement and reversals actually work. Okay? So as we can see, the market, when it tends to trend in a very orderly fashion, and that is in a zigzag. Okay? So the market always moves in a zigzag, and that's where people lose their money, on those zigzags. We here have tried to spot the reversal, okay? And as you can still see, it still works in a zigzag, so that's what my aim is, to help you spot that actual reversal. Okay. So retracements and not a retracement. So what are retracements? A retracement is defined as a temporary price movement against the established trend. Another way to look at it is that at an area of price movement that moves against the trend but returns to continue the trend. So as we can see here, we have retracements, retracements, and retracements. As I said, the market tends to move in a zigzag form, whether the market is going up or whether the market is going down. It still forms in a zigzag form. Okay? And what you're seeing in this part here, this is a not a retracement. This is actually a reversal. Okay? There is a slight retracement there, however. Okay, and a little mini one there, and a mini one there. Okay? Now, what are reversals? Well, same chart, okay? Reversals are defined as a change in the overall trend of a price. When an uptrend switches to a downtrend, a reversal occurs. When a downtrend switches to an uptrend, a reversal also occurs. Using the same example as the last page, here's how a reversal looks like. So this is a reversal point right here. Okay? What should you do? When faced with a possible retracement reversal, you should have 3 options. If in a position, you should hold on to your position. This could lead to losses if the retracement turns out to be a longer-term reversal. You could close your position, re-enter if the price starts moving with an overall trend again. Of course, there could be a missed trade opportunity. If price sharply moves on one direction, money is also wasted on spreads if you decide to re-enter. 3, you could also close permanently. This could result in a loss if price went against you, or a huge profit if you close at the top or a bottom, depending on the structure of your trade and what happens after. Now, because reversals can happen at any time, choosing the best option isn't always easy. This is why using trailing stop losses points can be a great risk management technique. When trading with the trend, you can employ it to protect your profits and make sure that you always walk away with some pips in the event that a long-term reversal happens. So we can see a reversal point here. And I'll go into the MT4 chart as I discussed before to show you some live reversals. That's the reversal point. We can see the zigzag, and we can see that it entered into a downtrend over here. Okay. So how do we identify the reversals? Well, I'll tell you the many ways you can identify a reversal. Proper distinguishing between retracements and reversals can reduce the number of losing trades and even set you up with some winning trades. Classifying a price movement as a retracement reversal is very important. It's where, this is how we make all our money. There are several key differences in distinguishing a temporary price change, retracement, from a long-term trend reversal. Here they are. Okay, I'm going to show you what to do in a reversal. I missed this slide before, so I'm going to go back and show you what to do in a reversal. If in a position, you could hold on to your position. This could lead to losses if the retracement turns out to be a longer-term reversal. You could also close your position, re-enter if the price starts moving with the overall trend again. Of course, there could be missed trade opportunities. If price sharply moves in one direction, money is also wasted on spreads if you decide to re-enter. You could close permanently. This could result in a loss if price went against you, or a huge profit. You can close at the top or bottom, depending on the structure of your trade and what happens after. Okay? So, retracements and reversals usually occur after a huge price movement. Okay? This is how we identify them. Reversals can occur at any time. Retracements, short-term, short-lived reversal. Reversal, long-term price movement. Retracements, fundamentals don't change. So when we see like a news trade or a spike, fundamentals don't change in a retracement. Reversals, fundamentals do change, which is usually the catalyst for the long-term reversal. And this is what I'm going to show you today. Okay, this note here is very important, and this is what I'm going to show you today. In uptrend retracement, in an uptrend, buying interest is present, making it likely for a price rally. In a downtrend, selling interest is present, making it likely for price to decline. Reversals. In an uptrend, there is very little buying interest, forcing the price to fall. Lower in downtrend, there is very little selling, interested folk forcing the price to further rise. So it's quite important, guys, that I show you reversals and what they actually look like in a real market. And there's many ways to identify a reversal. Okay, and that is using Fibonacci's. So using Fibonacci's to look at retracement levels is a key point. A popular way to identify retracements is to use Fibonacci's. The most part, price movement hangs around the 38.2, the 50, and the 61. So the 38.2, the 50, and the 61. These are the main levels you should look at a Fibonacci retracement. When you draw a Fibonacci retracement, you usually draw it from the bottom two to the top two, and that's how you get your fibs. I'll draw them on the live MT4 chart so you guys can see how I do it. If the price goes beyond these levels, the 38, the 50, and the 61, you may see a signal reversing is happening. Notice we didn't say will, as you may find figure out by now, technical analysis is an exact science, which means that nothing's certain, especially for Forex markets. In this case, the price took a breather, as we can see over here, okay, on the circles here, and rested at 61.8, the Fibonacci retracement levels, before resuming an uptrend. After a while, it pulled back again and settled for the 50% retracement level before heading up. Okay, so we can see that there. The user support is also good, and this is why we have to identify the breakouts and fakeouts as discussed previously. Another way to see if a price is staging a reversal is to use a pivot point. In an uptrend, traders will look at lowest support points, S1, S2, and S3, and wait for it to break in. In a downtrend, traders will look for higher resistance points, R1, R2, R3. S1 stands for support 1, support 2, and support 3. R stands for resistance 1, resistance 2, resistance 3. So that's what you can see in this diagram over here. They're the resistance levels, and they're the supports. And the way we use that is using a pivot point. If a price was an uptrend and broke through the support lines, a reversal could be in formation. So that's what that arrow is pointing over here. Okay. And the last method is looks quite simple, but it can be quite a tricky one. Okay. And the last method is to use trend lines. When a major trend line is broken, a reversal may be in effect. Okay. When these methods can identify reversals, they aren't the only way. At the end of the day, nothing can substitute for practicing and experience. With enough screen time, you can find a method that suits your trading personality and identifying retracements and reversals. Okay? As we said before, reversals can happen at any time. Retracements can turn into reversals without warning. This makes using trailing stop loss and trending environments very important. With the trailing stop loss points, you can effectively prevent yourself from exiting a position too early during a retracement and exit in a reversal in a pinch. Now, this is one of the reasons why I showed you guys previously about take profit and stop losses and where to put your orders in, because you don't want to get wiped out during these little bits here, okay, these mini retracements, okay, and you can see the reversal point occurred here, and that's how we identify reversal points. Okay. So there's many points over here that we can definitely see. What I do want to do now is pull out my my MetaTrader, and I want to show you how not to get wiped out during these little periods here, and how to pinpoint these as well, these reversals. So it's extremely important that I show you this on a MetaTrader, which I'll begin to do now. So I'm just pulling up my MetaTrader right now. Okay, I'm getting my MetaTrader out. Okay, here's my MetaTrader for today. And I want to have a look at AUD USD chart, and I'll just go to my my standard setting that I use. I'm just going to remove all these indicators not to confuse you guys. And I want to go to a 1 hour chart. Okay. So what you're effectively seeing here is, if I go to a 4 hour chart, we can see there was a slight increase in the Australian dollar. Okay. We then noticed that over here on the Australian dollar, pull out my pen, we saw the news that came out. Okay, so the news came out here, tended to drop the Australian dollar down. This is not a retracement, this part here. This is actually a reversal from a slight downtrend. Okay, so we see the double here. That is a reversal. So as we see the reversal occur, we then have news. So this is pre-news trading, this part here. Okay, so that is pre-news trading. And what's happened during that pre-news trading, we've seen a decrease. We've then seen a little retracement, and the fundamentals take place. What you're seeing here now, this is on a 4 hour chart, remember? Okay, because I want to show you the whole bigger, larger picture. What you're seeing now here is a retracement, not a retracement, but a reversal forming. And that way it was extremely important to show you that. So reversal forming slightly to the uptrend, it looks like. And that was because there was retail sales news out today. And with that retail sales news, you've seen this occur, this uptrend, these two green guys. Alright, so I'm going to go into a 15-minute chart. And there it is. So this is your slight uptrend that's starting to occur now. Okay, so this is a slight uptrend that's starting to occur on a 15-minute chart. Okay, so this part here. Now, what I'm also going to do is I'm going to pull out the Fibonacci's. And we're going to pick a double bottom to a double top. And we can see if it does break the 38.2, the 50 and the 61, then it's been a fake out. It hasn't actually been a new level forming, which is a new reversal. It's been a retracement, not a reversal. But so far it looks like it's actually a new uptrend is forming. If we see it starting to bottom out on 0, we definitely know that there's going to be that's going to be a strong resistance level, and that will also mean that the further uptrend could occur again. What you're seeing in this part here is actually a gap. This is called the weekend gap trade. So this, when the market closed on the red, opens on the green, means it's going to be down. Okay, so that's the weekend gap that you're seeing here. This flat line, this flat part here of the candles, what you're actually seeing there is a resistance level, and this will be a very strong resistance level. Okay, if the market can break between 101.85, it's 101.65 now. If it can break this, we could see a further a huge breakout. We could see a further upside to the AUD. Okay, none of these, what I'm saying, is a recommendation to buy the AUD at this level. But this is just what I see in the market and my views and how I'm seeing the charts at the moment. Okay, this is a lovely chart to do a lot of explaining on, to tell you the truth. As you can see here, you can see the downtrend occur. Then you see these things here, they're called retracements, not reversals, retracements. Okay, and then it looks like it reversed to downtrend, and that was a massive reversal. And then it bottomed out, and another reversal. So remember over here I said if it can form a straight line here, it could go up further. It bottoms up. Exact same thing if it's going down. It forms a bottom and then it bottoms down. If it goes up, forms a bottom, it goes up. That's how it usually works. Okay. So this was really a lovely chart to look at and to explain this. And it's a chart that we can all relate to. It's an Australian dollar chart. And if you're a US person and you know, you would want to come traveling to Australia with the high Australian dollar. Does anyone have any questions so far in regards to anything I've discussed or anything in particular? And I do apologise about the technical issue we faced earlier. I'm not too sure what happened there. I do have this recording though, and I will put it on YouTube, the whole thing, so in case people missed halfway through. So that should not be an issue. If you've got any questions, you can type it in the chat box on your GoToMeeting. If you want, I will open up. I'll unmute you guys, and if anyone's going to want to discuss something with me, I'll unmute you now. Just say your name, and then once that person's done, next person can say their name and begin with the questions. So if my name is Stavro, obviously, I would say Stavro has a question, and so I know who I'm speaking to. Okay? Alright, so everyone's opened up now for discussion, and I can possibly hear all you guys on your microphones. Does anyone have any questions in particular? Yeah, sure. So say again, with the pivot points, do I suggest using a day chart, you said? No, no, definitely not. You should be using current pivot points. Yeah, use that current pivot points. I usually like using pivot points on a 15-minute chart or a 1-hour chart. Okay. You got any other further questions there, Anthony? Okay, cool. All right. Thanks for that, Anthony. All right, so I'm going to answer Kulvadi's question. What is the best time frame to trade for a living? Well, that's that's a very good question, and I like that question. There's multiple time frames. It depends what strategy you trade. If you are a news trader, you know, you'll trade a 5, 15, or 1 minute. If you are a scalper, you probably trade between 5 and 15 minutes. It really depends what type of strategy you're using. I think day traders don't trade anything over an hour, that's for sure. Okay. All right, so I've unmuted the microphones again. Anyone else have any questions they want to discuss in face to me if they've got a microphone? Or in the chat box, they can type it in there. It can be absolutely any question you have in mind. Or it can be if you want to have a look at another chart, I'm happy to do that. Do I use stochastics? Yeah, hold on, Anthony. I'm just going to answer this question about using stochastics. I don't tend to use stochastics too often. I use other things such as Fibonacci, pivot points. I use a lot of I use a MACD. I use a indicator that's linked to the MACD called the tricks, but I don't tend to use a stochastic too much. I don't rely on a stochastic too often. However, if you think it's working for you, then it's fine. Apologize for that, Anthony. I'll answer your question now. Yeah, great question. I don't usually look at candles and look at like dojis and pins and things like that. I'm not that type of a trader. What I do look for is volume. I see that a volume is flat. That's when I know that this kind of formation occurs. Let me just pull out my pen again. When I see this kind of formation here, I know that the volume is flat. That's how I see it. And I also see the market going sideways. And I tend to draw lines to pick that out. Same with this part here. If I see it happening 2 or 3 times in a row, when I'm going to say 2 or 3 times in a row, I see like, let's say 4 candles, and then I know it's kind of coming flat, it's bottoming out. Like over here, I can see like a bottom is starting to form, and that's where I pick up the zero. So I'm assuming there's going to be further bottom here before it does a breakout, if it is to go to the uptrend side. There's an indicator you can use over here. It's called a channel index, I believe it's this one here. And that helps you identify if the market is straight in line, and you can say it's bottomed out, so you know that's bottomed out. That's a channel index that I tend to use, and that's also a good way to pinpoint these types of markets, to see a trend in a channel. That's another way of picking it out. I'll just ignore my indicators here. Okay. Alrighty. I'll answer the next question from Kulvadi. I hope I'm pronouncing your name correctly. I apologize if I don't. If you use a 15-minute chart to trade using pivot point strategy, do I need to use other time frames to confirm? Sure, yeah, that's a very good question again. A lot of people, when they use a 15-minute chart, they tend to look at the 5-minute chart and the 1 minute. The 1 minute is really not that important, but they look at the 1 minute, they see something occur. They look at the 5, they see it occur. They look at the 15, and it's like the magnifying glass kind of strategy. Yes, it won't harm for you to do that, and that it's excellent that you actually take into account that type of strategy. Okay, Rod said, with a double top or bottom, does the market look to squeeze out stop losses? I'm not too sure what you mean by that. With a double top or bottom, does can you clarify a bit more about the squeeze out part? Are you referring to when the market double bottoms over here? I don't understand this squeeze out part too much. If you talk about double tops like this, I don't think the market knows what a stop loss is. It's only our programs know that. Some platforms don't actually have a stop loss, guys. A lot of institutional platforms don't have a stop loss. You just got to sell out or buy in. That's how they do it. Gopi's answered the question, can we practice scalping on demo account? Very difficult, Gopi. It is very difficult. You can try to do it, but the thing is with the demo account, the spreads are usually quite larger. With the real account FXTG, you can get 1 pip fixed spread, and that's what you want really. 1 pip fixed spread. Okay, question to answer. I hope I answered it. I'm not too sure what you were saying. I think, Rod, if you mean about double tops and double bottoms, the market doesn't know if there's a stop loss or take profit. And a double top or a double bottom usually doesn't do to squeeze it out. It's just that the market's forming a different pattern. Remember, there's 40,000 strategies out there people are trading. So not everyone is trading the same thing that we are trading. What we're trying to do is we're trying to simplify the market for us to make it easier for us to understand. Okay. And is anyone in this room from Melbourne at all? If you're from anyone in this room from Melbourne in Australia? Daniel, yeah. Anthony is. All right, fantastic. Well, guys, if you're from Melbourne, FXTG, our office is, we're having a seminar here on Wednesday night. If you're interested, shoot me off an email and I can send you the invite. It's free. It's a free seminar. There'll be light refreshments provided as well. Goes for about an hour, let's say. And our Melbourne office, so you come here, you can probably meet me face to face too. So that's a good time. If you're interested, definitely, yeah, shoot me off an email and I'll put your name down. There's limited seats available, so let me know. Gopi, when is the next webinar? I believe the next webinar will be next Thursday, not this Thursday coming, but the next Thursday. I wasn't able to make it this Thursday, that's why I've changed it to today. Okay, can you get a negative balance if you have a stop loss in place? Excellent question, and yes you can, of course. With FXTG you can never lose more than what you've invested. But with many other brokers, yes, you can lose. You can have a negative balance if your stop loss is in place. Of course, you can. Primarily, you shouldn't put your stop loss into a balance that you don't have. Rod, as the number of clients increase, will you do other capital cities? Yeah, for sure. We're actually looking at it as a plan to go to other capital cities and run these types of one-on-one meetings and live seminars. That's definitely going to happen with our current clients that we have. We can do that now. It's not a problem. Whether it's me taking it or someone else, I'm not too sure. But yeah, for sure, that's a good option. Yes, with FXTG, I'll read the question just for people that can't see it. Can you confirm that you cannot lose more than your original investment even if you keep trades over a weekend? Yes, with FXTG, it's in our product disclosure statement. If you trade and if you invest $5,000, for instance, and you trade and your balance goes into negative $200, you lose all your money. Something happens, touch wood, you lose all your money and you go into negative 200. When you redeposit your account again, FXTG will zero out the $200 that you've lost. It's not because you've lost it, it gets stopped out. So you're never going to lose more than what you've originally invested. So you'll not take my house. I've got my own house to live in, thank you. I would not take your house, no. My job here in FXTG is to help people buy more houses than not take away people's homes. Definitely not. No, you can't lose with FXTG. You cannot lose more than what you've originally invested. That's for sure. So if you ever get margin call, you can either top up your account, or if you lose what you've invested and you just redeposit again, I mean, it's a learning fee. It's all a learning fee. And remember, the more money you got in your account, the better it is for you to trade, and the more money you can make, and the less risk you can face if you put in smaller lots as well. If you did lose, maybe there's negative gearing. I mean, yeah, like it's up to your own tax benefits. What you do in your taxes, you could definitely do you could definitely write it off against taxes. Do we have any other questions? I feel like I'm an accountant now asking tax questions. Any other questions? Anyone got any other questions? I'll open up the mics one more time. Someone to have a discussion with me about anything. What is the ideal amount to invest? Look, it's an investment. It really depends what you invest. What you invest. It really depends on your financial goals. In Forex, the average in Australia is around $8,000 for a Forex trader. Overseas, it tends to be a bit smaller, about the 5,000, 4,000 mark. Really depends what country you're from. It's an investment, you know. Would you invest $1,000 in the stock market? No. Can you buy a house with $1,000 in the? No, you can't. You can't buy a house. In Forex, can you invest $1,000? Yes. Are you going to survive with $1,000? Probably not, because it's such a little amount. So I suggest the more you got in there, the better it is for Forex, for any type of investment. But obviously, I'm not your financial advisor to discuss that personally. But it just makes general sense and general knowledge that if you have a larger account size and you limit your risk accordingly, you should be fine. So that's that. Kovali has said, can you teach how to position sizing on a 15-minute chart? Position sizing, do you mean how much to enter in a trade as position sizing? Okay, cool. All right, sure. I pull it up on a Paint document that I've got here. Okay, so let's do $5,000 account. Okay, we got a $5,000 account. I usually use about 2% on a $5,000 account. So 2%, so I go $5,000 as a calculation using my calculator. I go 5,000 times 2% is $100, meaning that I'll be using $100 for margin. Okay, and that's usually, let's have a look what $100 is. So we put a trade on, that's usually 0.1. So we can type that in, 0.01, 0. And we'll see here, $33.94 was margin, so it's a bit less. 0.1, that means if 0.1 is 33, then we'll put 0.3. So 0.3 is what the lot size would be. 0.3 to 0.4 would be a lot size. That's why it's good to have a demo account, just to do a quick calculation and you can work it out. So that's how I try to work it out. I wouldn't go more than 2% on any account balance. Remember, it's a slowly build up. It's a slowly build up. You don't just go whammo and put the whole thing down. Little small trades, a lot of frequent trades, that's what you want to do. I hope that explained it to you. Any other questions? Anyone have any other questions? Okay, hold on. If the account is large, can the spread be less than 1 pip? Yeah, of course. FXTG does offer more than 1 pip fixed spread. Now, if you do want more than 1 pip, you would have to go to an ECN account, and sometimes it's less than a pip on an ECN account. ECN is Electronic Communication Network, so you're going direct to the market. You pay a small commission to do that. Depending on how much you invest is how much the commission is. Gulvadi said, if I have a stop loss of 30 pips away, what lot size should I trade? Well, it should, regardless if you have 30 pips away, your lot size should always be worked out as a percentage. So a $5,000 account, as an example, was 0.3. Okay, so always stick to that 0.3. Any other questions? Anyone have any other questions? I'll unmute the microphones one more time. If anyone wants to say something, I've unmuted you. If you've got a microphone, you can talk into me now. Nope. Okay, fantastic. All right, well, thanks everyone for coming. And I do apologise about the technical issue that we faced earlier today. I don't know what it was. My microphone didn't want to work, and no one could hear me. So hence to why I used GoToMeeting. And how did you guys find GoToMeeting anyway? Did you find it a bit easier than the other one? No problem. I think it's a bit better. It's only bad when I got a lot of people in it. That's all. Alrighty. Well, sounds good. Well, look, I appreciate everyone for doing that, and that was really great. Uh, do you have a video teaching pivot point strategy? I sure do. Sure do. If you want to hold on a second, I'll give everyone the link and where you can find the videos. How about that? Give me an absolute second and I'll get that all for you. Okay. I'm just looking for it now. Alright, sorry guys, give me a second, just clicking through my way here. I think I found it. Okay, so alrighty, give me a sec. There you go. There's the link. All you got to do is just click that link and scroll down, and there's heaps of videos there. Got videos on trading correlations and live trading, about the Forex world, Forex technical basics, FX indicator trading and how to use FX systems, about trading indicators and live trading, support and resistance levels including parabolic SAR, Fibonacci retracements, technical indicators and moving averages. It's all there. Have a look at them. They're quite good. I only post the best. Alright. Yeah, if you're going to come Wednesday, yeah, shoot me off an email and I'll send you the invite. It'll be a pleasure to see you all come on Wednesday. Alright guys, well have a good one and look after yourself. Thank you now. Bye.